Good morning, friends. Welcome back to the State of the Market Live. We'll analyze Nifty and Bank Nifty futures today. Today is 28th July. It is monthly expiry in Nifty and Bank Nifty futures. And this is the 39th episode. So let us first analyze how the market has behaved on a daily time frame. Then we will get into the intraday time frame. After that, we will see how the structure of the market has changed yesterday. Okay. So yesterday, Nifty began at the lows of the previous day. However, immediately it was rejected, and we'll observe in intraday price action. So how the market was rejected at the lows, and it went and closed right at the highs of the previous day. Now, yesterday's price action is pretty important. The first thing you should notice in Nifty futures is that we have an outside day. That means both sellers and buyers were, the previous day's buyers and sellers were flushed out. That means the market went up, flushing out all the weak shorts. And initially, before doing that, it went down, flushing out all the weak longs. It took all longs into the fold, and then it went up. So this kind of price action is not normal. You see, in the past, that means within the frame of this chart, you can see that kind of price action has not existed. What I mean by that is, you see any of the green bars or red bars, the outside day is very rare. So you see this one. This is one place where we have a clear outside day. So, and that usually leads, if you take this as a fractal, but here we have a similar low, but here we have a slightly lower low. So this is more powerful. We need to go up. That means we need to be trending higher today. And you do not have any outside days. I mean, this is an inside day, almost inside day. But what happens is, typically whenever there is an outside day, that means whenever the bar is trading outside of previous day high and previous day low, usually you have a gap up or gap down, depending on the kind of bar it is. Okay, so you see this was slightly an outside day. It is not exactly an outside day, but there is a gap up. Okay, so here there is an outside day and there is a gap up. But what happens is, after that day, the price action will be different than what people think. Usually 90% of the time, you take any outside day, most of the time we should not form a bias. Remember that we should not form a bias. What happens is, what I have typically seen is, whenever there is an outside day, people come, like most of the retail players or leveraged players, they come with gutso. When I say gutso, that means they will come with all energy, but that energy will be poured into. What I mean by that? For example, you see, there is an, we'll take any outside day and see that the next day will be typically, for example, this is an outside day, right? So we closed outside, but the next day you see that it will not be, the move will not be similar like this. So yesterday there was a big move. So today there is a fair chance, I'm saying like 85 to 90% chance that we may open up and then close lower. Okay, open up and close lower. You see any kind of outside day, this is what happens. The market will open up, but then it will, it will be watered down. Basically, the emotions will be totally watered down. So, for example, you see, I mean, this is not an outside day, but typically when you see an outside day, the next day is typically a small day. It is not going to be something very big unless there is some news or there is something that is seriously. So, for example, this is an outside day. But what happens is, the next day, the market will open and then remain kind of very dull. So here we may open, but then the gap may be closed, or the bar may be small, the range may be small. Anything can happen. You take this one, for example, this is not an outside, this is a typically inside day, but you see that it will give a feeling that it gaps down and then it comes into the range. So today we have to be very careful, because it is especially expiry, anything can happen. So we should always keep a 5% probability that anything can happen in the market. Now what we are doing through these videos or through our preparation is we need to observe probabilities. For example, look at this bar price action. So this is typically not exactly an outside day, but you can say that. For example, if you consider this as same low, you see, and the next day you see that how the price action is very simple. So today it will be watered down. That means today mostly 95, 85 to 90% chance is that we can have a narrow day. That means a very narrow range bar. So do not expect something big. However, if that 5% probability comes into picture, if we have to go up, we have to stay above 800. Remember that. So if we open anything below 800 and could not break this level, there is no point in expecting a deep fall as well. So mostly it will be, I am expecting, we need to wait for pre-open. So I'm expecting an open somewhere here and close somewhere here. Only a break of this low can bring the picture into a bigger probability. So you need to position your trades in such a way that you are not looking for a large trade, but whenever the situation comes, that means whenever this range is broken, whenever this 800 is broken or this low is broken, then only you should look for big position sizes. Until then, you should not frustrate yourself. Do not get into a bias. So when we have an outside day, go with very low expectations. Okay, very low expectations. This is the best example. You see that next day we open, we form an outside day. So after this particular day, what do you think the trader psychology will be? Especially we have opened here. So what they will think, if we break the day low, we are going to make it. Yeah, it happened the day after, but that particular day, that is on this day, nothing has happened. Okay, so it would have a very small day compared to, it is not even 50% of the previous day. So you need to be very, very careful. So whenever there is an outside day, take a step back, relax, and then trade. Especially today is expiry, so we need to be very, very careful. So very rarely, for example, I'm not saying that we will only close lower, or we are not building a bias. For example, there is an outside day here, okay, but the next day is very good. So there is always that 5% chance of something can happen, always. Okay, so for example, this is an outside day, but you see that the move is very small. So always control your expectations when these outside bars are forming. And also you see that this is very, very important. You see that the momentum is falling because today is options expiry. You need to be very, very careful. I am not bearish or I am not bullish. Once the market opens, I will decide what to do. Okay. Now, let's see what Bank Nifty is doing. The same story in Bank Nifty. We have a very good outside day. Okay. So here also you can see, if you are very well versed in quant, you can do some back testing and all, but I depend mostly on this kind of observation of charts and market behavior. So we have an outside day. So there is fair chance in Bank Nifty we can go up, because in Bank Nifty, you would see outside days are typically very good. So for example, you see that they are decent than Nifty. So here you see an outside day, but here it is very small. So like that, any outside days, you can kind of mark them and see that. So for example, this is a very big outside day. You see next day, what people will come? They will come with an expectation that, kind of there is a gap down and we will break down. But it is very small. So the location is also important. Here you see that it is bunched up near moving averages. Here it is not. So we need to observe what we are going to do after the auction and after the pre-open. Now here in Bank Nifty, for me, the levels are very, very important. We will observe in weekly charts as well. So we need to keep this range into picture. So option sellers might look for this range as to start with, to kind of, there will be a lot of post-event IV crush today because the Fed has happened. Everyone was expecting 100 BP hike, but we got only 75 BP hike. So the US markets ended very higher. There was a trend day there. So our expectations will be built into that. We may gap up, but we need to ensure that we are not breaking this doji high. Okay, so we need to observe the price action once the market opens and then take a decision. So in Bank Nifty also observe this range. This range is very, very important. So anything above that needs to be looked at carefully. So we'll look for higher levels as well. Let's see what has happened on an intraday basis yesterday. So this is just for granularity. That means whenever you are looking for the next day, you need to observe what has happened the previous day. So you see that the market kind of opened above yesterday's close, but it tried to break yesterday's close, but it did not break yesterday's low, and slowly it was pulled back. So the moment we broke this level, so I was not at all bearish. Okay, if we have to be bearish, we should not have broken this swing high. Very important. Okay, this swing high, when we broke, immediately I shifted from puts to calls. Okay, we got a stop loss hit on a put, and then immediately we went in a call, but we went in Bank Nifty. We will observe that. Yesterday I mentioned in my channel that there was a lot of trapping happening in Nifty. Okay, and then the market was taken up. So before the market went up, there was a lot of indecision around 530, 560 levels, between 530 and 560. These are two levels which I have been mentioning in my channel. So consistently the momentum was up and the energy was building up towards the Fed event. Now, what is going to happen today is we will open somewhere. As per SGX, it is implied that we may open somewhere around 760. We'll also observe why this level is important. And then if we open above this, we need to break 828 or 840 levels, then only we can get upside. Once we are above that, you can keep a stop loss around 760. Once we break 840, you can keep a stop loss at 760 and relax. If that does not happen, if the pre-open indicates 828 or 840 levels, there is going to be a move down. And if 760 is broken, then we have to look for lower levels. What are the lower levels that we have looked for? So we need to, we'll observe market profile for lower levels. So probably we may look for even 560 and 581. So on the upside, you need to ensure that we are staying about 16,760 and 16,828. Remember these levels. Okay, so in pre-open, from pre-open we'll get information of how the market is going to behave. Now, let's see what is Bank Nifty doing. Bank Nifty was like, a sweet charm. Yesterday, options gave good trades in Bank Nifty than in Nifty. Nifty was very sticky. So, we took a put, but that did not work. That means that did not get executed, but our call got executed. So the moment we were above this level, we entered a call and made very good money on this, because the calls were really ballooned. When I say balloon, IV was like, kind of volatility was ballooned for expiry. So today there is going to be a lot of IV crush at the opening. When I mean by IV crush is, yesterday, the hot air was blown into option balloons. Now today, all that will come down. So you need to understand the price action. Remember this, whenever you are trading option buying today, you need to be very careful with stop losses. All stop losses will get hit. Only sellers are going to get advantage unless we are breaking the range, the daily range that I have mentioned. Again, to repeat, what are the daily ranges? The daily ranges are going to be this one and this one for option sellers. Beyond this, option sellers are going to be in trouble. In Nifty, what is the range that we talked about? So once again, we'll just, yeah, this is the range. So you have to be very careful with this range. So once Nifty breaks this range, buyers are going to have a field day. So we should be ready for all kinds of possibilities when we are getting into the markets. Now let's see what the market profile chart is saying. Sorry about it. So yesterday, as expected, let's see Nifty. Yeah. So once we opened around here and then we went down, but the moment we were rejected, that means the moment we were rejected, so there is no point in staying short above this level. So once we broke into this value area zone, I started not here, not at 480, but above 520 and 530. This is when I started becoming positive. However, Nifty had a very poor distribution, that is a poor structure. This is not the kind of profile I would look for. If the auction is healthy, that means yesterday trade facilitation was not clear. This is what this profile indicates. It means the structure is very poor. That means it is like, it looks very lumpy. It should not be lumpy. It should be very good with a very clean profile. Then only you can think that the auction is very good. Yesterday the auction was not good, and also sellers took over from 660. Now today we are going to open somewhere. I'm expecting the open to be around 760, and we need to break 828 or 840 levels. If that does not happen, remember that if that does not happen, if we stay below 760, it is going to be a field day for shorts. Okay, shorts can come all the way towards 560 or 530 levels, and below that you can expect the kind of damage that shorts can bring to bulls. Okay, now let's see what Bank Nifty market profile has in store. Now you see that this is also a trend day. The structure is not great. So you see that most of the trading, kind of got shifted to upside while we expected on the downside. So these are all post structure areas. So if the market falls, these zones are where the market will kind of consolidate. So this can be a good support level. So here as well, we need to ensure that we are opening above 800 levels. So what is the level from market profile I am looking for? So we need to open above 850 and 988, that is 37,000, and stay above that. So if bulls are really strong, they need to take it above and not below. So this zone is like line of sand, and below this, the market can easily collapse right at the open. Let's see where the pre-open brings both Nifty and Bank Nifty. So let's also look at Reliance once. So Reliance had a very boring day. This is one reason why I was not, kind of bullish about the market. However, it seems to be a gap up, but that gap up, whether the gap up will sustain or not, needs to be seen in the context of pre-open as well as where the real market, regular trading hours market is opening. So in Reliance, we need to break this 2400 or this particular zone for any good trades. Yesterday, we tried to go long, but the trade did not happen. So any move about 2434 is going to bring a good move in Reliance. Otherwise, today probably there can be a small gap up. Let's see intraday chart. Yeah. So I was expecting a move about 2434. This is the level. So today there can be a gap up around this level, and we can go all the way towards kind of 2455, and this is the zone which you have to keep in mind. So 2435 to 55 is the zone for Reliance that you have to keep in mind. Now today's topic, what are you going to discuss? Position sizing, very, very important. Most of the traders do not understand the concept of position sizing. Why? Because once the 9:15 bell rings, they are emotionally attached to their trade. Their mind is equal to that of a kind of an irrational person, basically a monkey. Okay, so the mind is equal to that of a monkey. For example, if you watch the latest movie Vikram from Kamal Hassan, in that he clearly explains how humans have changed from monkeys, but their mind remains as that of a monkey. Like a person who takes drugs, the market is a kind of drug that ruins a retailer's mind. Remember that. Very, very important. Okay, so it is equal to that of kind of a drug which will make you fall into the addiction. Remember that you should not fall into that category. So what am I connecting here from position sizing to irrationality in your mind? What happens is, the moment you see conviction, for example, if the market is falling and here your setup comes into picture, you are so confident that you will put entire capital or uncalculated amount of risk into the trade, and then you got nothing. Okay, you are expecting something like 20 points and you are putting your entire capital into that. For example, you have 10 lakhs, you put entire 10 lakh into this, or 6 lakh into this. That is not the right way to trade, because when you trade, your risk should be very small, and risk is not just determined by stop losses. Remember, risk is not determined by stop losses. For example, if I have 10 lakh capital and if I take only one lot of Nifty, one lot of Nifty option or even future, I don't have to keep stop loss at all. Why? Because my risk is low. But when you are multiplying your number of lots, when your position sizing is increasing, that is when your risk is multiplying. It is not adding, it is multiplying, it is exponential. Remember, every lot you add to your position multiplies your risk, it does not add your risk. Remember, this is very, very important. I want to re-stress this. When you are adding one lot plus one lot plus one lot, your risk is getting multiplied. Okay, very important. When you are having 3 lots, your risk is R cube. It is not 3R. Remember. Okay, there is a concept of R. When I look at stop losses, that we will discuss some other day. But today, let's focus on position sizing. Guys, people who get worried in trading are those who have very bad position sizing. Very bad position sizing. For example, I have 100 crore and I want to build a building in a tier 2 or tier 3 city, like Kochi or Mangalore, or kind of Vishakhapatnam. So I don't have to worry because I have 100 crore capital. But when I have 100 crore of capital and I want to build a building in Mumbai with 1,000 flats in a building, that's it. My position sizing has changed. The building will crack. So remember that I am giving metaphors for you to understand. When I said trading is a kind of drug for retailers, it means they are getting addicted to. They are becoming irrational. What do I mean by irrational? You take a small kid, a 3-year-old kid or 2-year-old kid into a toy shop. He's confused. He's flummoxed. He just gets confused with all the toys. He wants everything. He doesn't know what he wants, right? That is losing rationality. So as a kid loses rationality after getting into a toy store, a trader loses rationality right at 9:15:01 seconds. Okay, the moment you step into the market, whether online or in the pit, you lose your mind. So you need to ensure that you have a rational mind. So if you look at my option trades, I am pretty confident in my option trades, but I never fiddle with my position sizing. The moment you fiddle with position sizing, that's it. You are done. Eventually, one day it is going to get you into a big problem and you will lose financial capital. But losing financial capital is not everything. Losing emotional capital is, because when you lose capital, that day you cannot enjoy your Maggie, you cannot enjoy a fruit bowl, you cannot enjoy a good movie, you cannot enjoy a good talk with your kids. Nothing can happen because you will not have a rational mind, right? So keep this in mind. I think that's enough of lecturing today. Today is expiry. Prepare well, size your positions less, and also trade safe. Please subscribe to my channel so that you get more value content. And also please like and please give comments, guys. No one is giving comments. I want you to give comments and ask questions so that I make this a value added affair. Okay. Have a great Thursday. Have a great expiry. Be safe. Bye bye.